Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I've got some charts on foreign exchange I'd like to look with you today. And the first one I'd like to start with is the euro against the US dollar. Now looking at this chart, you can see it's a second indecisive pattern in a row yesterday. This time it was an indecisive doji cross. Still, nothing in recent action changes the idea of a big head and shoulders top formed over 2017 to 2018. The target for such a move, well, that's still below the market, well below the chart at the bottom, and that's at 104.85 area. In the meantime, watch the old familiar 38.2% Fibonacci level of the 2017-2018 move at 111.86. It has held up the market in the past and is currently acting as an attractor. The next chart I'd like to look at is cable, or sterling against the US dollar. On this chart we can see a continued follow-on lower yesterday to the recent bearish harami. This time it's a bearish opening long black Mariposa that punched through the medium moving average support, currently at 130.07. However, it closed right back on it last night. We've nevertheless had a second consecutive close below both the neckline of the June to October 2018 reverse head and shoulders pattern, which is currently 130.88, and also the very recent 50-cent Fibonacci level at 130.77. Now today we've pushed up from that medium moving average just a bit. I mentioned a few days ago, and I quote, "It will be interesting to see how the market deals with the 50-cent Fibonacci level and the neckline." That was from below. Now we're seeing how it is being impacted from above. Meanwhile, don't forget they're not far below the medium moving average, with the long moving average currently at 129.57. The next one I'd like to look at is euro against the sterling, a cross. And in this chart we can see the following. A continued follow-on higher yesterday from a bullish opening white Mariposa from the very recent pipe bottom. Now prices managed to punch up through and close over the very recent 50-cent Fibonacci level at 85.96. They actually halted at the 38.2% Fibonacci line of the same move at 86.25 before closing just over that 50-cent Fibonacci level. Now today the market seems to be having doubts as it's moved back towards that same 50% Fibonacci support. The next chart I'd like to look at is the US dollar against the Japanese yen. On this chart we can see the following. Still a continuing follow-on lower from the recent key reversal down and subsequent gap lower. Yesterday the market moved further down and tested the 110 even level, but perhaps more importantly it was the second consecutive close under the medium moving average, currently 110.54. We're coming towards the end of a fairly free territory zone as such, which I've recently spoken and written about, with the start of significant support at the important 50-cent Fibonacci line of the November 2018 to March 2019 move at 109.63. It also has adjacent the seriously flatlining middle time of the November 2017 to October 2018 shift pitchfork, currently at 109.44 to deal with. The final chart I'd like to look at is the Aussie dollar against the US dollar. And on this chart we can see very simply a bearish double pattern yesterday. A simple one, but a still valid one. Now we've had a follow-on lower today, as well as the market tries to test down to the very recent low. So in the meantime, I wish you all good trading.